right, welcome back everybody. Today we are talking about Ethereum. We're going to discuss why Ethereum could be headed for a price explosion this summer and throughout 2022. And we're going to explain and dive in depth, but in kind of a very easy to understand way, what the Ethereum triple halving event is. But before we hop into that really quick, just wanted to make you guys aware that all of my subscribers can redeem a free chart pattern guide. So the form to fill out and to put your email in to be sent, this chart pattern guide is in the description below. So make sure you take advantage of that. So on to what I have prepared for you guys today. So first, we want to dive into Ethereum's network fee structure, because this is kind of where it all got started in terms of what's been changing for Ethereum and what could actually change in terms of price action and structure to Ethereum blockchain. So the first thing I want to note is that these network fees that you see right here have actually been broken now into two different categories. So same amount of fees, but into two different categories. Now a piece of this old fees are called base fees, and they are going to get burnt on every single network fee transaction. And another piece of that is still going to go to the blockchain miner for that tip, and then in addition, obviously, their block reward. But that's kind of how the new structure has been designed, and so far the results have been pretty interesting. So 70% of transaction fees on Ethereum will be burned now, and the supply will be deleted from the circulation. That's big. We'll get into that here in a moment. That remaining 30% will be delivered to stakers in addition to their regular issuance as a further staking reward. So very interesting how that's going to be structured, and what this actually means in terms of effect to Ethereum is since August, there have been $5.9 billion worth of Ethereum burned. That translates to 200,000 Ethereum tokens burned. Remember, we're at 120 million total circulating supply, so that's quite impressive to see. Now moving over to the supply versus issuance, this is kind of showing the supply increasing here in the blue line of Ethereum over time versus the rate of issuance into the market for the amount of Ethereum. So you can see that that's kind of gone down essentially to zero now, since we have actually hit and this doesn't go quite to where we're at. We're over here somewhere in terms of the timeline, but this is kind of showing us that we're going to plateau at that 120 million and no more is going to be issued there as well. That's kind of what this is getting at. So it's kind of showing the inverse relationship between the supply and the issuance rate, and how that supply is going to eventually level off here, and that's what we're kind of illustrating in this diagram. So just wanted to point that out from a visual standpoint. The other thing that has been really interesting about Ethereum, and this has kind of been developing just over the last year or so particularly, but the amount of Ethereum that folks are staking, that investors are staking, has gone up parabolically. So if we look back here, May, August, September, this area, we're under 10 million total staked at this point. And that's just about, a little over a year ago, right? And to see that from 9 million to go to 32.3 million Ethereum staked in less than a year, or about a year and a half, is crazy. And that's over $100 billion locked in Ethereum right now. And what's so impressive about that is that this is 26.9% of the total Ethereum supply. So this is off the market, that cannot be bought. It's being staked, and no one can touch it. I mean, these staking on Ethereum 2.0, you can't pull that out, at least as of now. So, that is really incredible in terms of contributing to the supply shock of Ethereum. Other thing I wanted to note is that this kind of includes everything. So, non-staking. So this includes DeFi protocols, pools, things of that nature. And we're above 31% of all Ethereum being staked at over $115 billion in total USD value, which is just absurd, to think that 31% of total Ethereum tokens are actually off the market as we speak. So moving into what kind of makes this interesting and why, kind of how it comes to a head as a triple halving event. So really what we're looking at here is we're going to have, as time goes on, we're always going to have our speculative investors. So there's increased buy pressure there. We're always going to have, well, not always, but we hope, especially with Ethereum, especially if you're an Ethereum bull, we hope that network adoption is driven upward as well as more and more applications get built, as more and more popular applications get built. And this is just to kind of put us into context. I really, really like this visual. It shows us and gives us an idea here of where we're at in the scheme of adoption, right? So this up here has our 1 billion mark. This is 2.2 billion crypto users. And it's saying, this is right here between 2021 and 2022. This is just a little bit outdated. And it's basically tracking the total number of crypto users versus the total number of global internet users and kind of, matching that parabolic kind of movement like this, that kind of, goes from 50% yearly growth down to 20% and so on as you kind of reach, increased adoption. So if this, kind of projects out as it's supposed to be, we're going to see a lot more users, a lot more investors, a lot more folks coming to crypto overall. And if Ethereum remains, the number two and basically, essentially the go-to for DeFi and any other sort of kind of use cases on a blockchain, given it's the most popular blockchain, it should see increased attention and more investment because of that. So we covered these two. We have high network adoption, high speculative investment continuing. But now that you're going to be able to stake Ethereum and Ethereum 2.0 once it merges this summer, you're also going to have staking yield buyers that are interested in purchasing for the yield. So that's going to bring more purchasers into the ecosystem and as well lock up that supply, which will drive this number up even more. So you can start to get the idea. It's kind of a self-fulfilling prophecy, right? And now we move on to kind of the deflationary aspects. So right now, running the numbers, kind of the consensus is that we're going to see a decline in the circulating supply of about 2 to 5% annually, and that's Ethereum tokens. So we're expected to see that each year, 2 to 5% of that total supply of the Ethereum tokens decrease. And over time, we're expected to see between 30 and 80%, maybe even up to 90% of Ethereum supply locked, meaning it is in DeFi liquidity pools or in other DeFi methods, or it's staked as well. And this is meaning that it's off the market. It cannot be sold. These holders of Ethereum have it locked up in other use cases and other activities on the blockchain. And to put that into context, right, we're already at, above 30%. So, getting to that point in, less than a year, about we'll call it a year and a half, is pretty impressive in terms of what it could mean for the future. And the other thing I wanted to note, because it is, it's not something that should go unmentioned. There will be a way lower effect, way less effect on the environmental impact. So this has led a lot of people to speculate that it's actually going to lead to more institutional adoption and investment in Ethereum, because right now it's a very bad way to align your brand, especially nowadays with the environment being so important. People are cognizant of it now. It's something that brands are aware of as well. So if they can drop this kind of environmental impact, all the bad branding they get from that, Ethereum, I'm saying, that could bring in more institutions, which obviously brings in more money. And it's really impressive to see that they actually will be lowering that due to proof of stake. So expect more eyes to be on it from that. So now I want to get into what the actual math of the halving is. What is the actual Ethereum halving? How does it relate to what we just spoke about? So Justin Drake is a pretty famous Ethereum researcher. He's been at Ethereum for 4.5 years ish, and he talks a lot about some of how this math is going to work, and what the updates, what the halving actually means for Ethereum. So he kind of took these numbers from, I believe, last August and started kind of breaking it down. So from this day in August, he's taking a random day, but the percentages apply. These actual, number values are going to be different based on, the day that you look for. Ethereum is probably seeing more trading volume than these days that he was doing this on. But the the calculations on the left are interesting and give us some insight. So he says, let's assume daily sell pressure is 22.3 thousand Ethereum per day. With those calculations and the same assumptions, the sell pressure after that EIP559, so that's the update that recently happened that we talked about at the beginning, the network fee structure update. So in between that and the proof of stake update, which is where we're at right now, he's expecting 15.7 thousand Ethereum transactions per day. After both the update and the proof of stake merger, they expect it to drop 2.6K Ethereum per day. Now this drop from the 22.3K Ethereum up here, the original sell pressure without that update or without the proof of stake merger, that starting sell volume, moving that from 22.3K to 2.6K is where that 90% of supply reduction comes in. And then that's used to calculate the triple halving, which is obviously a 50% times 50% times 50%, which gives you roughly 12.85%, which would lead to 87.5% reduction in supply. So roughly triple halving, maybe even a little bit more. And why it's called triple halving is because obviously Bitcoin, has that 50% halving moment happen every so often, right? You hear about it a lot, and that's why this is called the triple halving, because you have three 50% multipliers with this model in Ethereum. So that's where the actual name triple halving comes from. That's where the idea comes from. And that is why there's going to be so much counteracting pressure from the buy side, and then also from the decreasing supply side here, and then the buy side here, and just seeing how that's going to counteract. I think it could be a perfect storm to see Bitcoin go parabolic here pretty soon. And as I've been researching this, it's really hard to, talk about a six-figure Bitcoin without laughing a little bit, a six-figure Ethereum without laughing a little bit. But at some point, you do need to understand that the level of supply shock versus the level of actual buyer interest hasn't really been seen at this scale yet. So really nothing is out of the question. Obviously, we could only see 10K, who really knows, right? But I think keeping your mind open in terms of the actual math and how this could happen, is pretty interesting. So here's kind of the very, very basic case for how Ethereum could get to six figures. So the idea from what we just talked about, we're going to kind of throw in that reducing supply, and then as well, so like we said here, these metrics that are kind of reducing supply, and this is, obviously just kind of an adder, but these two that are reducing supply, and these are obviously increasing the buyer pressure. So taking those two into account, here's kind of what we're looking at from a macro point of view. So with such a large amount of illiquidity, meaning the amount of Ethereum that's locked up, so if we see 80 to 90% of Ethereum locked up, not able to buy or sell, think about what that's going to do to Ethereum, right? So to reach a market cap of 15 trillion, which would be 150K Ethereum, this would be 10 trillion. You wouldn't actually require $15 trillion worth of ETH to be bought, right? So this is the idea. Given you have so much ETH locked up, times the amount of buying pressure we might see, you're not going to need to see $15 trillion worth of Ethereum to be bought to get to 150K Ethereum, because that supply is driven down so low and because so much is locked up and it's so illiquid. So through the power of a price insensitive staking with high yields, it'll attract more staking, which in turn leads to more liquidity, which allows for the price of ETH to go up more easily, which is exactly what we just talked about. So wrapping up, obviously 150K ETH, any way you cut it, sounds ridiculous. This is kind of more to say, hey, it is possible. This is interesting theory on the merger. Obviously, the merger needs to go smoothly. It's expected to happen this summer. I think this year it's definitely happening is the idea that I'm getting. But in terms of, the actual date or the actual month, that's still kind of up in the air. But so that's kind of what I have for you guys today. Let me know if you have any questions in the description below. In the comments below. I know that this kind of gets a little bit complicated, but I'm really excited for the ETH merger. I have a big bag of ETH, so I'm really excited to see how they execute it. Obviously, a lot of this is dependent on how they execute that merger. It needs to go smoothly. They have to kind of stop the bleeding of developers and projects moving to Solana, AVAX, and some of these other blockchains. So thank you guys so much for tuning in. Excited to keep bringing you guys value, and drop a like if you got that value. Thank you so much, and we'll see you in the next video. Bye-bye.